The latest jobs report has put the Federal Reserve in a tough spot, as forecasts hint at a potential hard landing due to weak employment data, raising concerns about the timing of future rate cuts. This volatility prompts the Fed to consider significant interest rate cuts soon. What if the Federal Reserve's next move could reshape your financial future overnight? Stick around until the end of this video to discover the one critical piece of information that could help you capitalize on the impending interest rate cuts, an insider tip that savvy investors won't want to miss. Analysts at Citi and JP Morgan predict 50 basis points in September, another 50 bits per second in November, and 25 bits per second in December, reflecting an urgent need for action. Currently, CME data shows an astonishing 78% probability for a 25 basis point cut in September, with a 50 basis point cut at 22%. These rate cuts respond to declining economic indicators, and JP Morgan suggests the Fed could lower the benchmark interest rate to about 3% in the coming months, with cuts potentially extending into Q3 of 2025. Subscribe to our newsletter in the description to be the first to discover under-the-radar altcoin gems. Click on the link in the description to join now. We publish daily updates on promising under-the-radar altcoin gems. This situation raises pressing questions about the economic outlook and the possibility of a soft landing amid these crucial rate cuts. The central bank traditionally aims to control inflation while supporting consumer spending, but recent declines raise doubts. Former Fed Governor Lawrence Meyer stated, "Inflation is no longer a problem," indicating a shift in context for these rate cuts. The decisions surrounding these cuts will significantly influence our economic trajectory. Will the Fed balance job security with growth stimulation, or are we headed for a downturn? This potential decline has political implications. As Mark Summerlin noted, if the economy falters, Harris is less likely to become president. Amid this turmoil, the Fed must act decisively while facing scrutiny regarding these cuts. Experts debate whether the jobs report signals a temporary issue or a long-term trend that might heighten the need for further rate cuts. As uncertainties unfold, financial markets, including cryptocurrency, could react sharply to these anticipated adjustments, particularly in relation to rate cuts. Join our newsletter in the description to uncover altcoins before they explode. Get early access to under-the-radar altcoin gems ready to skyrocket before everyone else. Join in the link in the description. Every investor should stay vigilant, as these changes create risks and opportunities, especially regarding personal finance tips tied to loan rates and debt management. Understanding the dynamics of rate cuts is crucial for both economists and casual observers, particularly regarding inflation's impact on purchasing power. How will these rate cuts affect you during this evolving economic recovery? Engage with us in the comments. If you find this analysis helpful, like the video and subscribe for more insights on monetary policy, financial literacy, and economic recovery influenced by rate cuts. Together, we can navigate these uncertain times.